Here's what I did this morning, because I think it's important that we talk about our own trades, because we're telling other people, what we would do. So I will tell you exactly what I did. I'm going to avoid the futures options that I did pre-market because those are not really that interesting. IWM, I rolled down call spreads. SPY, I rolled down call spreads. SMH, I rolled down call spreads. Tesla, I rolled down call spreads. Qs, I rolled down call spreads. Coinbase, I rolled down call spreads. That's all I've done. I reduced my deltas.
Are you proud of your performance?
No. I reduced my deltas by 50%. That's what you can do in this market, is reduce your delta by 50%. You can't avoid this. Like, there's just, between any premium seller.
I'm sad there'd be days like this.
Yeah. Today's going to get a little ugly. We've been through this many times. And we're talking many times over 40 some odd years.
Turmoil? Can we use turmoil? Can't use crash yet, can we? Are we crashing?
No, it's not a crash. It's just, this is
getting close. It's setting up. There's definitely it's like that hurricane over the Gulf. You don't know where it's going to hit yet, but it's starting to get some turbulence to it, some spin to it.
Totally agree.
Thank you very much. It's Rob and Maria. We've been up all night like the last person. This is the first time we've gone through anything like this. I'm going to keep it super short.
Sure.
We need some hand-holding and the benefit of your experience. Our buying power is being tested. We're trading mostly naked puts in futures and in equities like Amazon and NVIDIA.
Yep.
In the futures, we're thinking about rolling down and out. We wanted to know, Maria and I both wanted to know, should we wait until 9:30 or 10 or now? What's really scaring us is when we see these spreads from 500 to 10,000 in the Qs. I can't imagine that to be a good
Rob, are your short puts in the futures options or the listed options?
Both. And we have 200 positions on. Only 10 of them are in the money. Those are the ones we're most concerned about.
Sure. Well, I would not touch the only futures options I would consider doing anything in this morning are the ones that have liquid markets, which is just commodities. None of the indexes, all of those prices are way too wide. And with what's happening, right here, since we started this.
Tom says way too wide, Rob. He's talking about $150 wide. They're way too wide.
Yeah, they're untradeable right now.
Untradeable.
And I know it sucks because as we're sitting here talking, the NASDAQ's dropped, 350 points and the S&Ps have dropped 50 while Tony and I are just sitting here talking. First of all, we don't know that in hindsight. And second of all, I don't think you can trade those markets. I think at 8:30 this morning, they'll tighten up and only be a couple dollars wide. Everything tightens up at 8:30 this morning.
All right. The other follow-up question is, can you explain to us, our buying power is being tested. It's coming up to 100%. How does that actually work, and what are our options as that number gets tested? That
won't. A lot of that has to do with just the fact that there's super wide markets right now, and some of the stuff might be a little bit. Some of the marks may be way off, like we mentioned earlier. They're using mid-price, and my guess is, because that's all we know how to use is mid-price. Everybody in the industry uses mid-price. And so right now, when you get a market that's, $500 wide, the mid-price tends to be pretty far off. Now, that said, anytime you get a vol expansion, right now we're talking about, almost a 50% vol expansion or 40+% vol expansion, pre-market. We haven't seen that in a long time. So you're going to see some really crazy kind of whacked out prices on the opening. I think you're going to have to do something. Clearly, the best markets will probably be in the futures themselves and not the futures options. I'm not suggesting to go sell ES or NASDAQ futures here because they just sold off 400 points. But in the future, if you have this kind of situation, I would sell some of the futures rather than try to deal with the options. I would adjust delta using futures only in these situations because at least the markets are tight. At some point today, again, Rob, I think you're going to have a pretty aggressive rally, and they'll be, I hope, they'll be higher than they are right now, and you'll have a chance to adjust that position, and the markets will somewhat normalize. We haven't had a down 4 or 5% opening since 2021, since 2020.
I think 2020.
What was the biggest move we had in 2022?
Oh, I don't know.
I want to say the biggest down opening we had in 2022, which was a pretty down year, was maybe 2% or so. I don't think we have had a 4 or 5% opening on the downside.
I don't remember volatility being up 50% overnight.
When Tony says that the VIX futures are 34, So they closed last night, let's just say at about 23.
And that was up from 17 or 18, right?
That's right. And they're up 1150 this morning. So that's a 50% jump in the VIX overnight. That doesn't bode well for premium sellers, of which we are. Gold's puking. It's down $61. And, I did adjust some gold position this morning. I rolled down calls. Luckily, we got filled. There wasn't a lot of options you could trade this morning. There were not a lot of trading things.
Just one final thought.
Yeah.
It's interesting. In many ways, and I'd love your all's thoughts on this, it's easier to defend down moves because VIX spikes, there's more dollars for selling premium, etc., and there's a natural bias for markets to move up than it was in the ES in November of last year when you were getting crushed on the upside. So it sounds contrary, but in many ways, this is a little more comforting than it is on the flip side.
Yeah, it's just the velocity. That's it. You don't get 5% up openings.
So I've closed out all of my positions on Friday. I lost some money on Russell and natural gas, so I just decided to go clean into the weekend, and I have nothing on. I decided I was going to go long gold last night, this morning, but the recession trade, it doesn't seem right. Everything's selling off. Do you have any ideas what I should do? Like, I have all of my Netflix available, no positions.
First of all, pat yourself on the back. Good job out of you. Not too many people have done that in their careers. So I myself, after 40 some odd years in the business, clap to you. So good job. Now what?
I mean, the world is your oyster, as they say.
I mean, your wife should be making you breakfast, or whomever should be making you breakfast in today's.
I mean, there are going to be a lot of things this morning. Like while we were just talking to that last caller, the S&Ps moved 50 handles. They were down 250. They went down 200. Now they're down 235. These things are moving all over the place. You can essentially, I mean, I probably, if it was me, I wouldn't be getting short here. That's for sure. So if anything, I'd be looking for opportunities to
stocks that you like, start selling some put spreads, or
I'd probably sell put spreads and things that you
buy
like.
a couple of call spreads if you really want to get a little.
You have the luxury of putting in a bid wherever you want it for something and waiting to see if you get hit, because you don't have to reach for anything. Everybody's going to be reaching today, and you don't have to reach at all. So you have that incredible luxury at your fingertips. I wouldn't, if I'm you, I don't think I do. I think I find whatever it is that I like, whether it's short bonds, like the guy called in earlier, long VIX, short the VIX, whatever it is, find what you think is interesting. Find what you think is going to have the biggest payout, and then put your bids in and hope you get filled.
Don't overthink it. Like you're talking about this recession trade and gold.
Yeah, forget about that.
Yeah, get it. Throw that out. That's.
By the way, if you liked gold this morning,
you love it now.
Love it now.
Right. I mean, play the market.
Yeah, you're right.
Even the S&Ps, NASDAQ, Russell, play the market.
We're going to go to Tom in Dallas. Hey, Tom.
Thanks for taking my call. I'm along a little VXX. It's the VIX short-term S&P 500. And I'm curious if you would add to the positions up almost 50% now, or hang on, sell a call against it. Only thing that's green these days.
Listen, Pat.
You're long?
Are you just calling to gloat? Is that what you're doing?
No. He's long SVXY.
No, it was underwater forever.
I said
now it's
VXX.
up 50%.
Hold on. Are you long? Did you say SVXY? What did you say?
No, VXX.
Oh, VXX.
X-ray.
Yeah.
On VXX, he's calling in to gloat. That's, you know what? I like a guy like you. I like to do that too. I sell a call against your position. Pat yourself on the back. This is great. I might even look to get out of VXX. I mean, it's gone from what?
Did they reverse split?
A while ago.
A while ago.
Yeah.
Oh, I can't believe the stock is $90. But this is why you can't sell volatility, naked calls and volatility.
He's long.
Yeah. So I do exactly what Tony said, Tom. I sell calls against this position. It's an absolute or
Tell you the truth. If you
take your profits.
Yeah, your first thing was, do I buy more? So I'll tell you what I do.
Oh.
Okay, I sell what I have, and I buy a call spread, a wide call spread. If that's what you want to do, if you still want to be long VXX, I wouldn't in this level, just because of the I've never seen a 50% move in the VIX future. So, I mean, I'm not looking to get long volatility here, but you are. Listen, that's what makes a market. I don't know anything more than you do. But I do look to reduce my exposure by selling the stock, if that's what you're long, I'm assuming, or deep in the money call, if that's what you have. And then I buy a call spread if you want to.
I like the bats play. sell out your long stock here at $93. It's a gift from the gods,
spreads,
and turn around and buy a call spread.
But just remember something. These markets are very wide right now. Now, if you have naked options, you may want to look to do something. I personally would be waiting for the markets to tighten up a little bit more. I think your spread on a lot of this, meaning long one, short another, and I think you're in a lot better position than what your P&L is showing you today. I know I have a lot of positions on that have some sort of defined risk to them, and the markets are being so wide that my P&L is exaggerated to a point even greater than if I bought the spread for a full loss. So take a deep breath, figure out exactly what you have, maybe give the trade desk a buzz.
If you had relatively a lot of dry powder, that's the situation I'm in. Any baby trades or?
I mean, I think there are some interesting trades today. Personally, I like getting short bonds up here because I think they've gone too far. And I think there's also, I liked the guy that was buying that SVXY. I think there's different spots today, Bank. If you see they just rallied S&P's 50 handles on, or 60 handles on literally like air. I think you could see that kind of move today. You could see a 100-point rally and a 100-point sell-off. Like if you're just long cash right here and you're in a good, cash position, you can kind of pick your spots. Just put, bids in. I would do mostly call spreads, but you can do, because everything's going to move today. But put your stuff in below the market or above the market either way, and you could pick your poison. I mean, everything is going to be crazy. From Apple opening under 200 to Coinbase being down $35. There's going to be stuff everywhere.